All right, welcome to the TFSA Mastery Bootcamp. We're here to level up your game, to take you from just being a saver to becoming a smart investor. It's time to really turn that TFSA into a powerhouse for building wealth. Let's dive in.
So let's kick things off with a really important question. Take a look at your TFSA right now. Is it just sitting there in cash? If it is, you're basically using one of the most powerful investment tools in Canada like it's just a piggy bank. We are absolutely going to change that today.
Okay, here's our game plan for the bootcamp. First, we're going to completely reframe how you think about your TFSA. Then, we'll get into the nitty-gritty of contribution room. Gotta know the rules. After that, we'll jump into some pro-level investment strategies, and we'll wrap it all up by building a solid long-term plan.
First up, let's get beyond the whole savings account mindset. It's time to unlock the real, true power of your TFSA, because believe me, it was designed for so much more than just holding cash. This slide right here, this is the core of it all. Yeah, the S in TFSA stands for savings, but its actual superpower is in investing. Every single dollar you make from stocks, from ETFs, from whatever, it grows completely and totally tax-free. That is a massive game changer for your financial future.
All right, Section 2, Contribution Room. Now that you get the why, we've got to dig into the how. To really make this work, you have to master these core rules. This part is, well, it's non-negotiable.
Let's break these rules down. First, easy one. You start getting contribution room the year you turn 18. Second, and this is the magic part, your investment gains don't touch your contribution room. So if you put in $6,000 and it grows to $10,000, that $4,000 profit is all yours, tax-free, and it doesn't limit you one bit. And finally, a huge word of caution. You have to track your own limits. The CRA website is often way behind, and at the end of the day, it's on you to know how much room you have left.
Now, this is a rule that trips up so many people. If you pull money out of your TFSA, you cannot just put it back in during the same year, unless you already had the contribution room. The exact amount you withdrew gets added back, but you have to wait until January 1st of the following year. Getting this wrong leads to penalties, so be careful.
And speaking of penalties, they are steep. For every single month that you are over-contributed, the CRA hits you with a 1% penalty tax on that excess amount. That will absolutely demolish your returns. So the bottom line is simple. Know your limit and stay under it. Period.
Okay, Section 3. Let's get to the fun part. Pro-level investment rules. We've got the basics down, so now let's talk about how to invest like a professional, not like a gambler. This is where you separate smart, repeatable strategy from just reckless betting.
This is such a critical distinction. The TFSA is built for long-term investing. If you're buying and selling constantly, day trading, the CRA can actually decide you're running a business inside your TFSA. They'll look at stuff like how long you hold stocks, how often you trade, and your knowledge of the markets. If they rule it's a business, guess what? All those gains become fully taxable income. It completely defeats the whole purpose of having a TFSA in the first place.
Here's a pro tip if you're looking at U.S. stocks. When a U.S. company pays you a dividend inside your TFSA, you're automatically going to lose 15% of it to a U.S. withholding tax. It's just part of a tax treaty. Now, in an RRSP, you can often get that tax back, but not in a TFSA. Look, it's not a deal breaker, but it's something you absolutely need to factor into your strategy when you're choosing your investments. So let's quickly recap these pro rules. 1. Know what you're allowed to hold in a TFSA. We're talking stocks, bonds, ETFs for major exchanges, stick to those. 2. Avoid pure speculation. And 3, and this one is so important, if you lose money on an investment, that contribution room is gone forever. If you put in $6,000 and it goes to zero, poof, vanished. You don't get that room back. That's why protecting your money is just as important as growing it.
We've covered the rules, we've covered the warnings. Now let's move into our final section and talk about the big picture. Building a long-term strategy for creating real, sustainable wealth.
This quote right here, this should be your mantra. Building wealth in a TFSA is not about hitting some crazy home run on a risky stock. It's about slow and steady, consistent contributions, and long-term growth. It's all about discipline, not drama. So how do you actually put this into practice? It's simple. You automate it. Instead of trying to find a big lump sum at the end of the year, just set up automatic contributions from your bank account. Whether it's $500 a month or $250 from every paycheck, doing this makes investing effortless and builds an incredibly powerful financial habit.
Now, if you've got a spouse or a partner, here are a few little optimization hacks. First, name them as a successor holder. This lets the TFSA roll over to them seamlessly if you pass away, which avoids a lot of fees and headaches. Also, if you have room, you can give them money to contribute to their TFSA, which basically doubles your family's tax-free investing power. And lastly, if you ever switch banks, use the official transfer form. Do not just withdraw the cash yourself, because you'll lose that contribution room for the rest of the year.
So we'll end with this question for you to think about. Your TFSA needs a mission. What is it for? Is it your retirement fund? A down payment on a house? Maybe it's your ticket to financial independence. Defining that purpose is what will guide every single investment decision you make from here on out. So, what's your mission?